South Africa's private equity industry currently has 126 billion rand in assets under management, and this figure has been growing by a compound annual rate of 11.6% per annum over the last 13 years. This growth looks set to continue as recent pronouncements by the Government Employee Pension Fund for one and changes to Regulation 28 have opened the door for greater use of the investment class. Warren Watkins, partner at KPMG, joins us to discuss the release of the 2013 Private Equity Survey. Warren, thanks very much for your time.
Thank you.
Let's just start with the overriding theme that you discovered from the 2013 Private Equity Survey.
We do the survey every year on an annual basis, and we think we cover about 90% of the total industry in total. So we've got 126 versus the 115 or 114 billion last year, so a nice increase on that. The total funds under management included in that number is undrawn commitments. So one of the themes that comes out of that is there's 35 billion rand in total at the moment that is available for immediate deployment in the private equity market. So that's a very large amount of money that can be deployed. In addition to that, on the back of that, we've also seen 14 billion rand raised in the last year from funds. And the majority of that, 56% of that, has come from South African sources.
Warren, with that 35 billion that is looking for a home, I guess you could call it, is that the money that's essentially ungeared, because the private equity model obviously uses borrowed funds as well? So if you were to give an accurate figure of the amount of money that can be deployed into investments, you'd take that 36 billion and add a factor there. I'm not sure what that is, to get a feel for how much money can actually be used.
That's a very good point. So that would be the equity check, as we call it. In the majority of instances where they do go and invest, the borrowings is equal to the equity check. So the total funds that could be deployed is about 70 billion.
Just looking at the general makeup of the private equity component, what foreign interest are we seeing? Obviously we've seen a lot of negativity around in South Africa incorporated right now, but to this point, have we seen renewed interest post the financial fallout?
Cumulatively, the total funds that have been deployed in South Africa that has been sourced from overseas has been closer to the 60% mark. We've seen
60%?
that 60% of the funds that have come in for private equity have come from overseas. That in the current survey or the current year, we've seen that reverse. But what's encouraging is we've seen quite a few of the foreign private equity funds now also coming into South Africa and having a good look, and they're looking also at Africa as well. So I see it starting to reverse.
When you say it's reversed, sorry, so 60% previously has been from foreign funds.
Correct.
What number are we looking at the moment?
40 at the moment.
40 at the moment.
Yeah, 56 versus 44 to be exact. Yeah.
But again, the foreign interest coming through.
Foreign interest coming through, 44 at this point in time. Yeah.
What sort of transactions have been, if we could just turn our attention to what sort of transactions you've seen over the last year, where has this money kind of been deployed? Because to my mind, I haven't seen any listed companies being delisted last year.
Yeah, the market of trying to take something off the bourse is very difficult given the current tax legislation. Under Section 45, you have to get pre-approval, and that would become difficult given some of the rulings that we've currently seen. So I think until there's clarity from the receiver of revenue, we might not see some of the take privates that we have in the past. This last year, a lot of the deals have been relatively small, but if we look at what's been raised now, what currently is available for deployment, and the money that's recently been closed, and I look at Ethos, for instance, have just raised $800 million. We know what the GEPF is wanting to deploy in the region of 60 billion odd. Some of the other new funds that have come in, like Carlyle, etc. We know a number of other funds that are in the process of currently raising and have had first closes, for instance. There's going to be a significant interest, I think, in larger transactions going forward.
Where are we in the private equity cycle? I was reading through your report and looking at the fact that a number of these investments are at maturity, and we're going to see a number of exits coming through. That's
a very good point. I think there's a significant number of the funds are mature, i.e. in the next year, stroke 2 years, they will have to unwind up to 5, maybe 6 investments in their mature funds. And by the same token, because they're mature in the life cycle of the industry, they've raised a significant amount of funding now for their new fund. So I think we're going to see both acquisitions and disposals over the next 2 years.
On the disposal side there, Warren, are any of those likely to come to market?
I suspect they will, because there's a lot of them will be of a substantial size. We're talking 2, 3, 4 billion rand, if not more, where the market will take care of that quite easily. In addition to that, I think the multiples on the market at the moment are attractive.
Let's look at the rest of Africa case and how much of that is a draw card for foreign investors right now. Warren, we've discussed it repeatedly on the show that Africa, from a private equity perspective, is ripe for investment, in fact more so than in the listed environment.
Correct. And what we are seeing with our clients in the private equity market is the following. They are making a lot of investments, the 11 billion that we've seen in this last year. Of that, 5 billion was on follow-on investments. In other words, investments they've previously made, now they're following through with a further investment into that investment. And in significant number of those opportunities are for the throughput into Africa. So they're following the investments they've already made into Africa for expansion. So that's where a lot of them are doing, or how they're going into Africa.
Well, we heard John Oliphant talking about the opportunity that exists in things like infrastructure and energy. What's your sort of take when you discuss these options or the opportunities available for the firms both in South Africa and the firms operating pan across the continent, where the opportunities lie? Is that really where the focus is going to be going forward?
Correct. When we look at, we do one of the survey questions is to which area or sector the money is going into, and the winner of that has been infrastructure, which includes construction companies and all the services around infrastructure as well. So that's definitely an area of opportunity.
The leading theme.
The leading theme.
Which is
correct.
the next hottest theme, so to speak.
It's manufacturing still remains quite buoyant, and then retail as well.
What sort of transactions have you seen locally over the last year? I mean, you alluded to the follow-on theme that's taking place in Africa, but where we've got lots of different players in our market as well, so they do different types of transactions and they specialise. Just give us a rundown on what you've seen there.
We ask all the respondents to give us their top deals. Not all of them reply. They do say what part of private equity don't you understand? But be that as it may, the majority that have come back to us have been in the manufacturing area that have been disclosed.
If we see further turmoil on the international front and the recovery doesn't come through as many are hoping, what are the implications for private equity?
I think that's positive. And the reason for that is there's a thing in the market called the denominator effect. So as the pension funds see that the turmoil and maybe even a devaluation in the listed portfolio, the private equity portfolio, which makes up overseas especially a very large element, that is more stable, surprisingly enough, and as a result they're prepared to put more money into that. In addition to that, the returns historically in the South African market have been in excess of the listed returns. To give you an idea, on the 10-year money, I think the stock exchange has gone up 18% over the last 10 years, cumulatively, but private equities yield something in the region of 20.5%.
So it's somewhat defensive then?
It is.
One final question?
Yes, just obviously wanted to get your take on how the changes in the regulation, or the changes to Regulation 28 have affected the industry, and whether you see the retail component of our investment capital getting involved in private equity in quite a meaningful way through things like fund of funds, which we'll be discussing later on the show.
There's no doubt about it that I think we're playing catch up against the rest of the world in terms of allocating a much larger portion of our pension funds to private equity. The 10% mark that we now can get to compared to the historical 2.5%, it's definitely going to create a draw card into the industry, into private equity.
Thank you so much.